Hey all, welcome to ShareTreck. It's the 28th of June 2022, and I can see lots of moving parts today. So we have a lot to catch up. So let's get started. The very first thing I'd like to talk about is the ban on gold purchases from Russia. Russia has got huge reserves, but it's not a major producer of gold. It doesn't figure in the top 10. But the logic behind putting this ban on purchase of gold from Russia is to make sure that the oligarchs feel the pain, and then the oligarchs would likely put pressure on Putin. And the second thing is that sale of gold is giving money to Russia, and that can be again capped. So it's a systematic tightening of screws around Russia to make sure they don't have enough money to continue with the war on Ukraine and thereby bring an end to the hostilities. So this is the way I'm looking at it. And that's the first article of news. The second one that I want to talk about is regarding the comments from ECB chief Christine Lagarde. And she has said that she doesn't worry about recession, and that ECB would take necessary steps and act very promptly to control inflation. So that's a very strong hawkish statement. So it's bound to have its effect on the European stock market by pushing it a bit down. So that's another bearish pressure that we are seeing. However, pre-market, everything looks green, just like yesterday. We could start off green and then go red because it's a bear market rally. So we have to keep that in mind. Now, I'd like to start off with articles that I have come across. The first one says new CRISPR-Cas9 license agreement for ERS Genomics and CytoSurge has been signed. So this is proof again that despite CVC not having the patent right now in the United States, they are still able to sell non-exclusive licensing agreements worldwide. That is because they have the patents in Europe. So in a way, this is good for the CRISPR industry because it underlines the fact that the IP issue is not putting a damper on progress in the industry out there. So that's a good outcome for us. However, one of the things we have to remember is that CRISPR-Cas9 patent likely would expire somewhere around 2032 or 2033. So there isn't much time. So basically, nobody is going to gain from this dispute. And by the time the Federal Appeals Court comes back with a response, if it goes either way, there's likely to be a compromise. So I wouldn't be too much worried about the IP issue going forward. So that said, the next news article I have is Jan 6 committee announces surprise hearing for Tuesday on new evidence. Now, we are not a political channel and I'm not American, but as an investor in US markets, I need to keep track of these things, and I think you also got to keep track of these things because there has been around 300,000 people signing a petition to impeach Justice Clarence Thomas, and we have this surprise January 6th committee announcement for a hearing today. It's going to happen at around 1 o'clock at Capitol Hill, and they have not revealed who is going to be the witness, but they said it's an urgent hearing that has to be held. So it's we don't know what's going to come up from it. So around 1 o'clock to 2 o'clock, or maybe before that, we can see some fluctuations in the market, I would assume, because all these things tend to destabilize the nation overall. Any new revelation that comes up, because the country is deeply divided. So I would keep an eye out for action around close to 1 o'clock in the afternoon. The other item I have already spoken about is Christine Lagarde downplays the recession risk, says ECB is ready to move faster on rates if needed. Already spoken about it. G7 leaders take up a climate club and set up a climate club and take immediate action to secure energy supply. These things seem very cartoonish to me because due to the embargo on Russia, which they had to do in order to limit the ability of Russia to attack Ukraine and to bring the conflict to an end, most of Europe is starting to go back to coal-fired power plants, and this particular summit just seems more like a photo opportunity and people just letting the world know that they are doing something about it, but I don't know what is going to come out of it, because even before the conflict, decarbonizing was not going as fast as we would have liked to. So this Russian conflict has definitely set our environmental goals back big time. So with that said, I have one more advice piece on the news articles out here, which I agree with 100%. That is, don't get sucked back in. Fund manager says investors should learn from past bear markets. So the key points are that the positive momentum for global stocks looks set to continue on Monday after the Dow Jones Industrial Average climbed 2.7% on Friday. This rally could persist a bit longer, but don't think this is the end of the bear market. The S&P 500 is still down almost 18% year to date, while Stoxx 600 has shed around 15% by mid-afternoon in Europe on Monday. And I agree with this 100% because we are still in a bear market, and any rallies that are taking place in the bear market should be looked as in the context of what kind of a channel it's running on. It's running on a bear channel, so it's going to come back down before going up again, but every subsequent high in the rally is going to be lower than the previous one. That's how you have to visualize it. If you had to look at the principles of value investing, all risks get mitigated when you buy a company at a very attractive price. So many companies are in that stage right now. So for long-term investors, I would suggest that look at really good quality companies. Out here in Canada, I'm looking at TD Bank, Bank of Royal Bank, and Bank of Montreal. These banks have got steady dividends, and they have been increasing their dividends year on year. Regardless of whatever happens, they are trading in money, and money changes hands, and they make money. And even they have brokerages in which share trading takes place, and regardless of whether it's a bull market or a bear market, they still get commissions for every transactions that take place. And as a result of which, I think that their capability for banks to keep on increasing their dividends remains intact, and they have not reduced their dividends so far. And they're looking very attractive with around yields of more than 5%. So I would say that whichever markets you're in, look at steady companies which have been paying dividends and got a strong business model. And if you find the price attractive, be willing to wait for 3 to 5 years, and you'll definitely become much richer. So these downturns are opportunities for people to move from one level of wealth to the next level. I wouldn't say that you put everything into it, but if you had to do some kind of austerity measures and curb your discretionary spending, you can channel those monies into long-term investment, but be wise in what you're selecting. It has to be dividend paying. It has to have a solid track record of having a strong balance sheet, and throughout the period of its existence, it should have been paying dividends during downturns. So banks come to mind, real estate investment trusts come to mind. So these are the kind of instruments in which I would potentially put money. And also in technology, you have bellwether companies like Apple and Microsoft and Oracle. These are all good companies, in my opinion, which can stand the test of time and provide you ongoing dividends and also capital gains. So this is the opportunity. So I'm just saying this to balance off what I mentioned earlier from the news article, which said that don't go all in because this is a bear market rally and it's likely to come down. Yes, it will come down. We don't know how much more we have to go down. One thing I'm for sure in my mind is that as long as the Fed is going to keep on increasing interest rate in US, same thing is going to happen in Canada. We are going to match percentage to percentage. Otherwise, Canadian exports will be in a big deal of trouble, and Canadian imports will also get into trouble. Therefore, they have to go lockstep. So with that being the case, until the interest rates stop going up, we cannot see an end to this bear market rally. This is the simple indicator that I have come up with, this seems to me very, very logical. I cannot envisage a situation in which the interest rate is going up and still the market continues to go up. That's not going to happen. So we are right now in a bear channel. All these rallies are bear rallies, and the bear rally will end and we'll start a new channel which will be bullish only after the interest rate hikes stop. And I do not see the interest rates hikes stopping anytime soon, maybe another couple of months before the reduced oil prices can start showing up in inflation data and to show that inflation has peaked. The moment we see inflation has peaked, there should be stability. And the moment we hear the central bank saying that they are stopping their interest rate hikes, that's when we'll see the bull channel take off. So with that, I would like to go and have a quick look at the Nasdaq and see where we are at. Let's start with the futures. Futures are up 0.66%. And this is something similar to what we saw yesterday. We opened up green and then went red. I have moved the line of resistance a little up to connect all these points and assume that this is going to be the resistance for today. MACD is bullish and momentum is at average. We'll have to see what happens as the market goes ahead. But at this point of time, it seems to me that we are getting a bullish signal from the futures. So market open is definitely going to be green. Let us go to indicators and look at US oil first. US oil is going up and it's gone above the line of resistance earlier and it has stayed above. So it seems that it's on a march upwards, which is inconsistent with my belief that because of deteriorating purchase power, because of demand destruction, there is going to be a reduction in the demand for oil, and therefore oil price has to go down. So I'll wait and watch for what's going to happen. MACD is still bearish and momentum is still below average. So this could just be a blip and we might probably come down because we are getting good resistance from the 20-day exponential moving average sitting at 112. This is bearish for the market at this point of time. And if we were to go and have a look at put call ratio, we ended yesterday at 0.96, which is almost neutral. Because anything below 1 is going to be bullish, anything above 1 is going to be bearish. I think that we are likely to travel to the bearish side today and still be neutral. That will be somewhere around 1 or 1.04 by the end of the day. That is my prediction at this point of time. And if I was to look at XLY by XLP, it shows that we are in a risk-on situation because it is red. So consumer discretionary is not doing as good as staples. It's not doing better than staples. So that means market is defensive. So this is also indicating bearish. Now let us have a quick look at VIX. VIX is showing a little bit of a jump out here. It has got resistance at 27.20. And if VIX continues to go up, that means it is bearish for the market. So at this point of time, I'm not going to consider VIX to indicate either bearish or bullish because the movement is very negligible. So with that said, I'm going to go and look at QQQ. If I was to zoom out of QQQ, each of these candles are a one-day candle. And you can see we are in a massive bear channel. And so we can have bear rallies that can go up and then we can come down. It's like a huge roller coaster where you can take a long time going up and then take a long time coming down. So that's what is happening here. This is our roller coaster in the stock market. And we have support at 292.96. And right now we are at 292.45. So we are just below that line of support. And it's going to perform the role of a resistance. I'm not changing the color out here. The pre-market shows a gain of 0.56%, which is very negligible. So I do not know whether, like in the past, we are going to continue to go down a little bit before we go up again, or this is the point when we are going to just go up and go all the way to meet this diagonal line of resistance. So that is not clear, but our first level of resistance is going to be 302.95, and then after that we are going to have the 50-day exponential moving average, which is sitting at 304, which is this fluorescent blue line. It's at 304.37, and after that we have got another resistance at 310.45. So movement upward is going to be constrained in my opinion, and however the MACD is bullish out here. If I was to go to a one-day time frame and have a look at the charts, I can see that the MACD is bullish and the momentum is also above average. So today seems to be pre-market at least seems to be having a lot of bullish pressure on it. So the markets are likely to open green. Right now it is 7:45 a.m. at the time of recording. So it seems to me that just like yesterday, we are likely to start off green and probably we might give up some gains later in the day. And also remember the 1 o'clock hearing by the January 6th committee might throw up some information that could create some kind of reaction in the market. So all those things are also to be kept in mind as we progress during the day. With that said, I would like to go and have a look at our genomic stocks. So here we are with our genomic stocks. I am going to sort this and make sure that we have the biggest loser on the top. So yesterday, when we did our daily update, we had a inverse of this. All the shares, a majority of them were green, except 2 of them which were red. And at that time, I had mentioned the green ones are going to turn red and the red are going to turn green. That seems to be the logic of the market. That's how the market has been behaving of late. So if that logic continues, we should see all these red shares becoming green today, which means that pre-market we should see some positive action. We are seeing Invite up 0.69%, PACB up 0.56%, no trades in Allogene, SQZ, Verve, Edit. Bluebird has got a trade, but it's marginally down 0.70%. DNA is up 1.08%, Vertex up 0.85%. No trades in Regeneron. ArcG is up 1.23%. That is good for us. Caribou Biosciences up 4.13%. Is there any news from Caribou Biosciences? No, we don't have anything. It's just a sympathetic bounce. Illumina, no trades. IDNA, no trades. CRISPR Therapeutics, no trades. Intelia, no trades. Novartis, no trades. PFE is up 0.08%. Pre-market, not much, negligible. Teladoc is down 0.08, not much, negligible. And no trades pre-market for Beam, and no trades pre-market for IMTX. So my feeling is that today we are going to have a reverse of this. All these red ones are going to become green, and some of the green ones will tend up red, while the others may go flat, like minus 0.01% or something like that. So that's what I'm looking at. And if we look at the charts out here, each of these candles is a one-day candle. We have converted our resistance at I think it is 8.80. 8.80 has been converted into a support, so I'm going to put mark that green. Our next resistance is going to be this thick line, which is a 200-day exponential moving average, which is sitting at 9.39. That's going to be our next major resistance for IMTX here. And our MACD is bullish, and we are also having a good deal of momentum with space to go before we become overbought. So IMTX is looking good that way. And if we look at Invite, we can see that it's within the range that we had plotted. It's somewhere in between. So the risk reward is equally skewed. Likewise for PACB. PACB is more closer to the upper limit. Therefore, we have a greater risk of it falling down. So not to enter at this stage. Allogene is battling with the diagonal line of resistance that comes from a very long bull channel, so it's a very strong resistance. If we break that today, then it's going to be good news for Allogene going forward, because that will become a strong support. But if we don't break that, then we are likely to definitely come downwards with a support at 11.98 before we fall down further. That's what it looks like. And if you look at the MACD, it is bullish but tending towards the signal line, and momentum, which had been overbought, has now dropped, but it is still above average. So if we bounce off this line out here, then there's a good chance that we may be able to break through this diagonal line of resistance. Right now, pre-market, there are no trades. SQZ, which we have been covering recently, is closer to the bottom line of support, which is at 299, and its higher end support resistance is at 4.01. So again, risk reward is equally skewed. So personally, I'm going to just wait it out today and see what happens, and maybe tomorrow I might bite, because tomorrow I would expect the markets to go down. Again, we have this action coming up at 1 o'clock, which is the hearing by the January 6th committee. Don't know what surprises they have, and don't know if it's going to make any major impact in the overall environment, enough to impact the markets. But that is something to watch out for. Anytime before 1 o'clock and before market close, we could see some movements out there, in my opinion. So with that said, I'd like to bring this video to an end. That's all I have to say for today. And I hope you have a great day today. And if you like this video, please press a like out there. It'll help YouTube promote our channel. And if you're not yet a subscriber, why not? Please subscribe and help us grow this channel. Thanks and have a great day. Bye for now.